The latest U.S. economic releases show a troubling pattern. The economy is doing just fine. The GDP is expected to grow over 3% in the third quarter. Consumption is up. Consumer expenditures rose 0.6% in August, or up 5.5% in the past year. Yet, inflation still remains high. The personal consumption expenditure, that is an inflation index, the core, excluding food and energy, rose 2.9% in the past year, above the Fed's 2% target. Meanwhile, the Michigan Consumer Sentiment Index fell to its lowest level since May, and 44% of consumers say higher prices are negatively impacting their finances. And those consumers, on average, expect inflation to rise 4.7% over the next year and 3.7% on average over the next decade. What's going on with the economy is really somewhat of a recipe for social unrest. 10% of consumers, the highest earnings, account for close to half of personal consumption. That's the highest level since 1989. Meanwhile, the bottom 40% only account for about 20%. And so you have 3/5 of the U.S. population only contributing a much smaller part, and they're frustrated with higher prices. And that's showing up in some frustration in terms of some of this sentiment data. What are you seeing? Are you seeing this level of frustration among your friends and family? And do you think that could lead to more social unrest? Let me know.